Welcome back to Squawk. Regulators seizing First Republic Bank.
Regulators have taken action to facilitate the sale of First Republic Bank.
Now, we want to go back to the breaking news that we told you about earlier. Silvergate Capital is going to be winding down and liquidating its bank.
Alarm outside headquarters of Silicon Valley Bank in Santa Clara, California today.
We begin our report with the abrupt closures of 3 banks in a matter of days that are now sending shockwaves across sectors of the economy and raising concerns about the U.S. banking system.
Meanwhile, Signature Bank marks the 3rd largest bank failure in U.S. history.
The nearly $3.25 billion rescue deal comes on the heels of the failure of America's Silicon Valley Bank and Signature Bank.
Recently, there have been a spree of banking failures, and every time we think it might be over, there seems to be another bank that ends up collapsing. With Silicon Valley, New York Signature, Silvergate, Credit Suisse, and now First Republic all collapsing. And all of these collapses so far have essentially revolved around various issues caused by the Fed raising interest rates faster than ever before in history, leading to issues with previously considered safe assets like long-term treasuries that have rapidly declined in value. And another reason behind these collapses is just the rise in mobile banking and the speed of the internet. So all this information, whenever somebody hears about a bank that potentially could have issues, that rumor is able to spread way quicker. More people are able to hear about it way quicker, and those people, they don't have to drive down to the bank like they used to, back in the 1920s. Now they can just pick up their phone, click withdraw their money, and that's it. And this currently is causing all sorts of issues with small to medium-sized banks as they have a mass outflow of capital from people moving their money to places where maybe they could get a higher yield, or maybe to places that they feel are more safe. But there's currently potentially a massive issue lurking in the shadows that could cause a catastrophic amount of damage to these banks that are already teetering on the edge of collapse. And I'm of course talking about commercial real estate, which is a much bigger issue than most people realize.
There's no lending going on. There's no transactions going on. And it's going to be ugly. I mean, it's going to be at least as bad as 08, 09. People don't want to say that.
There are still a lot of question marks regarding the state of the U.S. financial system. Obviously, the big question mark is on commercial real estate.
People like Charlie Munger are saying, just like Elon Musk was saying the week before, that we have a lot of problems in the commercial property arena, and they're not going away. And a lot of these banks, the very big banks themselves, have a lot of this on their books. Should we be worried?
And if it does play out the way that I'm thinking, the damage that it could cause to the financial system could potentially be worse than what we saw in 2008. And to really understand this issue, first you need to understand that the way that banks work is that they take deposits from customers and they take the money deposited into the bank accounts and lend that money out so that they can produce a yield. So if you deposit $100 into your bank account, they take some of your money and they invest it so that they can make more money. Meaning, at any given time, all banks do not have enough money to pay out to customers if everyone were to try to withdraw at the same time. That's every single bank in the US. It's called the fractional reserve system, and it's how our banks work. Anyways, these banks put this money in a variety of places considered to be safe and stable. And one of those places happens to be commercial real estate, which historically has been a good bet. Unfortunately, for these small banks who hold a massive amount of these commercial real estate loans, it's looking like the commercial real estate market is about to fall off a cliff. The rise of remote work and the pandemic have left a lot of office spaces and retail spaces completely vacant. And as businesses close down and people work from home, the demand for commercial real estate is drying up at an alarming rate. In fact, vacant office space in the US is currently at its highest rate it's ever been. No rent is currently being paid on 1 out of 5 of all US offices. And we're already seeing commercial real estate selling at a steep discount. Some properties are experiencing as high as an 80% drop in value. And here's the really big deal. $1.5 trillion in commercial real estate loans have to be renegotiated in the next 24 months. Now you're probably wondering, how would all of this lead to a banking system collapse? Well, let me explain. Banks have been lending out money to developers and businesses for constructing and purchasing commercial real estate since forever. And the money that they're lending to these developers and they're lending to these businesses is your money. And with current market trends, these properties are losing value fast. So when the borrowers who borrowed this money can't repay their loan, banks face the risk of losing billions of dollars of customers' money that they lent out. Small banks specifically hold 80% of all commercial real estate debt held by banks. And to remind you, small banks are the ones that are currently teetering on the edge of a cliff. They already are experiencing the largest outflows ever seen in the last 50 years, as people are freaked out by the string of recent bank failures and they're moving, money to safer places, or like I said, they're moving their money to places where they can earn a higher yield. And as we pointed out earlier, banks just straight up don't have enough cash to pay out customers if all the customers were to come to banks and ask to withdraw their money at the same time. And Cato Institute currently estimates there will be 1 to 2 trillion in withdrawals from banks over the next 12 months. That's 12% of all deposits. That might not seem like a lot, but that's massive in banking terms. See, during COVID, the Federal Reserve announced that the reserve requirement, or the amount of cash that banks are required to hold on hand, was being reduced to 0. And even before then, it was only around 3 to 10%, depending on the number of factors and the type of bank you were. And most banks only hold around 4.5% of the cash needed to give customer funds back at any given time. So 12% of deposits being withdrawn means that these banks will not have nearly enough cash on hand to be able to accommodate all these people wanting to withdraw their money. And so they're going to have to sell assets to be able to cover the cost of these withdrawals. Assets that are currently severely devalued. This is exactly what happened with Silicon Valley Bank. They held 10-year treasuries that is severely depreciated in value, and when all the customers came and tried to withdraw their funds, they didn't have enough money to cover the withdrawals. So they sold these 10-year treasuries, but they sold them at a massive loss, and that freaked people out even more. So more people tried to withdraw their funds, which eventually led to the bank collapsing. And again, just as another reminder, any bank in the US can experience a bank run and a collapse just like this, because none of them, not one, have enough money to cover the withdrawals if enough people try to withdraw their money. Currently, commercial real estate is dealing with high vacancy, collapsing prices, and the fact that a ton of new commercial properties that have been being built are about to come online. And all of this at the same time that $1.5 trillion in debt needs to be renegotiated. So when a borrower buys a property for $100 million and they go to sell it and it's now worth $30 million less, and when they can't afford to renegotiate this loan at higher interest rates or just are unwilling to, and they can't find a buyer at a reasonable price, well, that borrower just ends up defaulting on their loan. And that causes a domino effect that pushes down the price of commercial real estate even further, causing other borrowers to default, pushing down the prices even further, causing even more borrowers to default, and you get the picture. And now these assets that the bank is supposed to be backing user deposits with are all severely devalued, and they don't have the ability to pay back all these people who are trying to withdraw from their bank, which causes people to panic and they all go try to withdraw their money from the bank at the same time, further putting pressure on the bank and leading to a collapse. And as more of these banks collapse, it freaks more and more people out who then go to try to withdraw their money from their bank, which causes more collapses, which freaks more people out, and again, the domino effect, leading to eventually this massive financial meltdown. And take into consideration that commercial real estate is just one issue currently plaguing the banking system. Banks rely on each other to provide liquidity and maintain financial stability. However, with more and more banks facing problems, banks are more reluctant to lend their money out. And this could result in a liquidity crunch, which would overall lead to a full-blown banking collapse. There's also issues with auto loans that few people are talking about. Credit card debt is at its highest level it's ever been. And currently, we're potentially on the brink of a major recession. Now, obviously, I'm not saying that all of this will happen. I'm just showing you the overall setup, the picture of the playing field, and what could happen with some of these major black swan events. There's obviously always the chance that the work from home trend reverses, people start going back to offices, and somehow commercial real estate ends up recovering. It doesn't seem very likely to me, but honestly, who knows what'll happen over the next 24 months. If this video is helpful, make sure to hit that like button. If you have any questions or comments, or maybe anything to add, or maybe there's something I messed up and you want to, fix or something, let me know in the comments below. And if you want to see more videos like this, make sure to hit the subscribe button and the little bell next to it to be notified each time I release a video. Thanks for watching, and I'll see you next week.